In the 1849 California gold rush, the single richest man wasn't a miner. He was a man named Sam Brannan. While thousands of prospectors flocked to the hill to gamble on finding gold, Brannan bought every pickaxe, shovel, and pan he could find. He then sold them to the miners at an astronomical markup, becoming a millionaire in months.
Today, we're living through the single greatest technological gold rush in human history, the race for artificial general intelligence. And one company, Nvidia, has just become the $5 trillion Sam Brannan of our era.
The chart that sparked this investigation showed Nvidia at a staggering $4.5 trillion valuation. That was just weeks ago. As of this recording, that chart is already obsolete. Nvidia has crossed the $5 trillion mark, a club so exclusive it's only occupied by giants like Apple and Microsoft. But here's the real story. Nvidia's dominance isn't just about selling chips. Their next move, a surprising and strategic investment into a forgotten company from the 2000s, reveals their true, long-term plan to build a monopoly that no one can break. On MoneyEmpire, we follow the money, and all the money is flowing to one place. In our last documentary, we saw how OpenAI's insane 38.5x revenue multiple was a high-risk bet on finding the gold. Today, we're analyzing the safer bet, the $5 trillion company selling all the shovels. But is Nvidia really a safe bet at this price, or is it the most overhyped, dangerously expensive stock on the planet? Let me know your position in the comments below. Now let's dig in. Let's start with that $5 trillion milestone. How did a company that was once just for gamers get here? For decades, Nvidia made graphics processing units, or GPUs, for rendering video games. But around 2012, researchers discovered a secret. These GPUs were also perfect for deep learning, the kind of math that powers AI. Nvidia's CEO, Jensen Huang, saw this and bet the entire company on the idea, long before anyone else. That bet has now paid off. Today, Nvidia doesn't just lead the AI chip market, it is the market. Nvidia controls an estimated 80% to 90% of the entire market for AI training chips. This is not a duopoly. It is a monopoly, plain and simple. When OpenAI, Google, Meta, or any other company wants to build a new AI model, they have no choice but to place an order for tens of thousands of Nvidia's chips, often paying over $40,000 for a single GPU. It is the most valuable shovel on Earth. This is why their revenue and profits have exploded, launching them into the $5 trillion club. But the hardware is only half of the story. It's the shovel. The other half is the secret weapon, the reason no one can compete. That weapon is called CUDA. CUDA is Nvidia's proprietary software platform, a programming language that allows developers to unlock the power of their GPUs. Nvidia has spent over 15 years and billions of dollars building this platform, giving it to developers for free. Now, an entire generation of AI researchers and developers is trained only on CUDA. They are completely and totally locked into Nvidia's ecosystem. This is the CUDA Moat, and it is brilliant. This brings us to their competition, or lack thereof. Look at the chart, you don't see AMD or Intel. Why? It's not because their chips are bad. AMD's new MI300X is a powerful GPU. Intel's Gaudi 3 is also a strong contender, but they have a fatal flaw. They don't run on CUDA. Switching from Nvidia to AMD is a difficult transition, like a Windows-only developer moving to Linux. It costs a lot of time and money. Nvidia doesn't just sell a better product. They sell the one that almost everyone is already trained on. This entire empire is orchestrated by one man, Jensen Huang. Part engineer, part rock star, and all-time visionary. He has become the single most important figure in the AI revolution. When he takes the stage at Nvidia's GTC conferences, wearing his signature black leather jacket, the financial world stops to listen. His keynote speeches are now more analyzed by Wall Street than announcements from the Federal Reserve. He doesn't just predict the future, he builds it and then sells it to everyone else. His leadership is a key reason for the company's perfect valuation.
Let's look at the current gold mine, the Blackwell generation of GPUs. The demand for the new B200 and B100 chips is so high that Nvidia has a reported 12-month backlog. They physically cannot make them fast enough. This isn't just good business, it's a license to print money.
This bottleneck allows Nvidia to have almost total pricing power, leading to rumored gross profit margins of over 70%. When you are the only one selling the shovels in a gold rush, you can charge whatever you want. And they do. This is the engine that pushed them past $5 trillion.
This is the single biggest wealth creation story of our time. A company that has fundamentally cornered the market on the next industrial revolution. If you want to continue to follow the money and understand the forces shaping your world, make sure you subscribe to MoneyEmpire. We break down the world's most complex financial stories every single week. The valuation has been further fueled by a very human, very financial tool, the stock split. In mid-2025, Nvidia conducted another 10-for-1 stock split. This, of course, does not change the $5 trillion value of the company, but it does change the psychology of the market. It took a stock that was trading for over $1,200 and made it $120.
This suddenly made it accessible and attractive to millions of retail investors, adding a massive wave of new demand and helping to fuel the final surge in its stock price. It was a brilliant financial move to capitalize on the public's AI enthusiasm.
But now, the big risk. Is Nvidia too perfect? Its $5 trillion valuation is priced for perfection. Any sign of a slowdown would be catastrophic. And there is a massive risk hidden in plain sight: client concentration. A huge portion of Nvidia's revenue comes from a tiny handful of customers.
The hyperscalers: Microsoft, Google, Meta, and Amazon. These four companies are buying the majority of Nvidia's chips. This gives them immense power. And what are they all doing? They are all in a desperate race to build their own AI chips in-house.
This is where Nokia comes in. Nokia isn't just a phone company. It's a networking and telecommunications giant. They hold key patents in 5G and are one of the world's leaders in 6G and fiber optic research. This is Nvidia's next trillion-dollar bet.
This strategic move reveals Nvidia's true long-term plan. They are vertically integrating. They are creating a new Nvidia standard for the entire data center. Step 1 was the GPU Blackwell. Step 2 was their own proprietary networking switch, NVLink. Step 3 is to merge that with Nokia's world-class 6G and fiber optic networking IP.
They are building a new, bigger, and more complex moat that competitors will find impossible to cross. They don't just want to sell the shovel, they want to sell the entire prefabricated mine.
So here's the final verdict from MoneyEmpire. Nvidia's $5 trillion valuation isn't just for selling chips. It's a bet that this company, led by a singular visionary, can successfully transition from being a component supplier to being the chief architect of the entire AI ecosystem. The CUDA Moat gave them their first $5 trillion. The bet on networking in 6G is how they plan to capture their next.
We've covered the miner, OpenAI. We've covered the shovel seller, Nvidia. But what about the land and the power? In our next documentary, we investigate the silent, brutal war for the two resources AI needs most: data centers and energy. It's the AI real estate boom, and it's just getting started.